Hey, good morning, everybody. My name is Cliff Backus, and this is your PushButtonStockTrading.com Daily Video Market Review Weekend Edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, markets took it on the chin again Friday, undercutting key support levels and closing near their lows for the day. Trading volume was very heavy, giving all the indices we follow distribution days. New lows crushed new highs by the worst margin since the market lows in August. The put-call ratio, which is a secondary indicator that compares the total number of bearish puts to bullish calls, is reaching extreme levels. The put-call ratio is a contrary indicator, so when the number of puts gets to be extreme, we begin to watch for a bounce in the market. Small capitalization stocks edged large on Friday, although large caps continued to better small on a 10-day moving average basis. Outperformance by large caps is less consistent with a bull market. Declining issues outpaced advancers by better than 7-1 on the New York Stock Exchange, and the New York Stock Exchange advanced decline line is showing weakness again. In what may be construed as good news for the bulls, our Ramosi swing timing model is showing an oversold condition in the market. But keep in mind, oversold markets can become severely oversold. The S&P undercut a key support level in the 2044 area, while the NASDAQ undercut its 200-day moving average. Our market timing model is now on a sell signal. A sell signal indicates that we should be off of margin and aggressive traders can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all portfolio positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. According to Investors Business Daily, the O'Neill timing model is indicating a market in correction. With the market in correction, we begin to look for a follow-through day. A follow-through day is a trading session at least 4 sessions into an attempted rally, when either the S&P 500 or the NASDAQ composite trade at least 1.25% higher on heavier trade than the prior day. We can begin looking for a follow-through day as soon as Thursday of this week. While some of our secondary indicators are showing an oversold condition in the market, both our timing model and the O'Neill model are on sell signals. This is a time for extreme caution in the market. We may want to take advantage of any bounce in the market to lighten up on long positions or to hedge our portfolios with contra ETFs. While we always try to err on the side of optimism in the market, we will also want to keep our stops at their tightest levels. Consider hedging our long positions and, as always, be sure to follow our written rule sets. If you'd like some help with portfolio management or with your written rule sets, please feel free to contact me. My contact information is on the home page. Okay, let's take a quick look at our spectrum analyzer. What we're looking at here is HGSI, High Growth Stock Investors, universe of over 8,000 stocks, sorted by a combination of the most powerful stocks in the most powerful industry groups. We've made a group of the top 100 stocks in that sort. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So let's plug these stocks into our spectrum analyzer and see where the strength in the market is. Friday. Of the top 100 most powerful stocks in the most powerful industry groups, a whopping 19 were from the real estate investment trust industry. 8 were from application software. 5 were from food and drug. We had 4 restaurant stocks, 4 home improvement stocks, and rounding out the top 5, we had healthcare, medical equipment, household products, and education services. We've been seeing quite a bit of real estate investment trusts recently, and we've also seen a lot of application software. These may be good places to look for strength in this market. I want to start today by taking a look at the Russell 2000. We've been keeping an eye on the Russell 2000 because I think the Russell is the key to this market going forward. If we were to draw in a trend line right here, it would look something like this. Notice how the Russell on Friday undercut this minor support level. That's of concern because we had put in this low, this high, this higher low, and this higher high. Undercutting this level of the previous low negates our uptrend. And so perhaps we can establish a new uptrend on this trend line if we can hold this area on Monday. Let's see what the NASDAQ Composite's up to. On Friday, the NASDAQ Composite was down 111.7 points, or 2.21%. That was a shellacking. We closed at 49.33. We undercut the psychologically important 5,000 level. Notice we closed at the bottom of our daily trading range, but more importantly, we undercut our 200-day moving average. That's significant because that gives us a sell signal. Notice that we track the 200-day moving average in black, and we track our 50-day moving average in red. We undercut both of those levels on Friday, and so the next area of support would be down here in the 4,900 area. On Friday, we traded heavier volume than the prior day, and we also traded above average daily volume. For those of you who follow William O'Neill, yesterday the O'Neill timing system went to a market in correction, and so we begin looking for a follow-through day in this market. A follow-through day is a trading session at least 4 sessions into an attempted rally when either the S&P 500 or the NASDAQ Composite trade at least 1.25% higher on heavier trading volume than the prior day. If Friday was in fact the low in the market, we can begin to look for a follow-through day as soon as Thursday of this week. Right now, we are on a sell signal on our market timing model. Let's take the markups off of this chart. I want to review real quick what a sell signal is. In order to go to a sell signal, we look for 4 things to happen. First, the NASDAQ Composite has to be below its 200-day moving average. We show the 200-day moving average in black, and as you can see, on Friday, we closed below that level. The second criteria is the 10-day simple moving average, which we show here in green, has to be lower than the prior day, and as you can see, the 10-day moving average is lower than it was the prior day. Third criteria, 21-day exponential moving average, which we show in pink, has to be lower than it was 2 days prior. And the final criteria is that the NASDAQ composite has to be trading at least 1% below its 21-day exponential moving average. This envelope, which we show in these gray dotted lines, is a 1% envelope around the 21-day exponential moving average. We're trading below that level, so we've met all four criteria for a sell signal in the market. Currently, the NASDAQ is on a sell signal. A sell signal indicates that we should be off of margin and aggressive traders can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all of our portfolios, and conservative traders may want to hedge their portfolios with contra ETFs. Let's take a look at what the S&P 500 is up to. The S&P on Friday was down 39.86 points, or 1.94%. We closed at 2012, and notice how we undercut this level of support, which we had been holding here in the 2044 area. We closed at the low for the day, and we look at the next area of support for the S&P 500 down here in the 1993 range. For you followers of William O'Neill, we are in a market in correction on the S&P. We went to the market in correction on Friday, December 11th. Right now, our market timing signal for the S&P is a sell signal. Let's take a look at some stocks that we may be interested in watching. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, we're currently on a sell signal on the market, but we could go to a buy signal as early as Thursday of this week. And so it's important that we maintain at least a little bit of a watch list. And so I want to put together a mini watch list here. I have four stocks that I want to take a look at, and the first one is Facebook. Facebook provides a social networking platform enabling members to stay connected with friends and family via Facebook.com. I think everybody knows what Facebook is. Facebook right now is working on this first stage flat base with a pivot point in the 110.65 area and gets a checklist rating of 64. This is a first stage base on base formation. Notice how we broke out of the first stage base right here. But because we didn't advance at least 20%, this next base that we're forming is also a first stage base. So we have a first stage base on base formation. We have a trend line here. And Facebook, assuming that we went to a buy signal in the market, could be bought on a break above that trend line in advance or anticipation of the breakout up here in the 110.65 area. Keep in mind that we are in a market in correction, and so we don't want to be buying Facebook just to buy Facebook. We want to wait for a buy signal in the market before we begin adding any long positions to our portfolios. Next, let's take a look at Palo Alto Networks. As we've been noting recently, Palo Alto Networks is working on this cup and handle base with a pivot point in the 194.73 area. This is a second stage base. Palo Alto gets a 76% checklist rating and can be bought when the market goes back to a buy signal. Palo Alto provides network security infrastructure products for enterprises, service providers, and government entities. Next, let's take a look at Store Capital. We'll take a little bit longer look at Store. What we're looking at here is a one-year chart of Store Capital, and notice this cup and handle base that we've been working on for quite a while. Not as nice a cup and handle base as the one in Palo Alto, but still a nice cup and handle base with a pivot point in the $23.13 area. This is a first stage base and can be bought by both aggressive or conservative traders if we go into either a confirmed uptrend in the market or a buy signal in the market. Store Capital gets a 68% checklist rating, and Store Capital has a nice dividend. Store Capital gives us a 5.4% dividend, so it may be worth taking a look at by income investors. And the last stock I want to take a look at is Alibaba. Alibaba we'll even take a longer look at. What we're looking at here is a downtrend in Alibaba that goes all the way back to November of 2014. Alibaba right now is working on this first stage flat base with a pivot point in the $86.42 area. Alibaba gets a 64% checklist rating, and keep in mind we're on a sell rating in the market. You don't want to be buying these stocks at this point, but we do want to keep them on our watch list because we could go to a buy signal as early as Thursday of this week. If we do, we want to have something on our list that we can buy on the long side. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.